Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for analyzing and identifying digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here's some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Well, guys, we really have had quite the week. If you missed it, there was a real big, massive drawdown in the crypto market on Friday afternoon. We saw liquidations across the space, lots of price volatility. The market has sort of recovered since then, but leverage in the system was completely wiped out. I'm going to dive into a bit for some of the reasons behind this here today, but that has been kind of what everyone's been concentrating on. So first up, we're going to start with Binance and Athena. So like I said, to give you, this is kind of context on what was going on Friday. So on Friday, like I mentioned, the crypto market saw this massive round of volatility with about $19 billion in liquidations. We saw asset price drawdowns as much as 70%. So there's a few kind of structural issues actually that caused this, not necessarily really like a actual like fundamental driven sell-off. So the first issue is that Binance, their exchange uses Athena's stablecoin called USDE as collateral in their margin trading. So basically for perpetual futures. So basically like you can use USDE along with other stablecoins as margin in your account. And if you haven't traded perpetual futures, it's any other leveraged product. When you decide to take leverage on any type of investment asset, you have to have some sort of collateral there that they can liquidate fairly easily if you are kind of like under like, you can think of it as like a certain mark. So the issue though is that USDE, although it is a stable coin, it is technically backed by a mixture of ETH and ETH futures. And so it is redeemable one for one, dollar for dollar, but the redemptions don't happen on the Binance platform. They happen through Athena's DeFi app. But Athena's USDE, it's been used everywhere. It's in tons of DeFi apps. It's used across a bunch of exchanges. So many were kind of thinking this is totally fine to use. So what happened on what's now being called Black Friday? Before we get to that, the main big issue though is that Binance was using a reference price to price USDE, not just at $1, but it was using it. It was pricing USDE based on the spot market for USDE on Binance's exchange, which is basically what somebody would call an attack vector, or like a point where somebody could manipulate the asset. Like I said, this situation just creates an opportunity for individuals to manipulate the price. On October 6th, Binance actually announced that they're going to fix this issue by using an oracle to price USDE, but that the change wasn't going to go into effect until October 14th. So why they gave an 8-day window for people to exploit it, we're not totally sure. So what we are pretty sure is a coordinated attack. We saw a trader sell anywhere from $60 to $90 million of USDE on Binance. And since the liquidity for USDE on Binance was not super liquid, it forced the price of USDE down to 65 cents temporarily, even though it was still $1 at other venues, even though you could get $1 back for each dollar of it on Athena's platform. As a result, margin accounts using USDE were all liquidated, which was about $500 million to $1 billion worth of liquidations to start. However, though, at around the same time, we ended up having the news of the Trump-China tariff war kind of get out as well. So this just caused kind of further contagion because people are like, oh my God, market's going down. So people started to sell, and this just created a very unfortunate loop as asset prices started to go lower. More people got liquidated. Another point that I didn't maybe mention was that in terms of how clear a coordinated attack it was, at the same time as after this first kind of leg of the trade happened, they believe somebody else who must have been kind of coordinating this took out about a $200 million short on Bitcoin and ETH on Hyperliquid's exchange. So that also forced even more liquidations. So we've got this vicious cycle of one person or a group of people manipulating the prices and just really liquidating what was essentially the whole market. So between liquidations on Binance and Hyperliquid, a lot of futures positions were liquidated into very thin markets, especially for any long tail assets. And that just really exacerbated these price moves. So we saw these 50, 70% drawdowns on Friday. At the same time, though, panic also set in that USDE might not be solvent. So despite this, the Athena team did process all redemption requests, and USDE remained at with $1 within DeFi and other exchanges. This mass unwind, though, in leverage did wipe out a lot of market participants. And we've seen, and like I mentioned, we've seen a lot of asset prices recover as much as the selling was forced. Finally, though, Binance announced on Sunday it would compensate users for losses amounting to $283 million as they admitted to platform-related issues. So this, like I said, uncovered kind of a bunch of structural issues that were happening on centralized exchanges like Binance. For example, Athena was fine on DeFi platforms like Aave, where they had very clearly hard-coded the price of USDE to be $1 or at parity with USDT, the Tether stablecoin. And as a result, that meant that any dislocations didn't set off mass liquidations for no reason. So like I said, these are very complex issues, but this is really what caused the sell-off. It was much less to do with any actual fundamental or even macro conditions and more to do with good old market tinkering. With that, though, both BNB and Athena have really suffered on their main tokens. The BNB token is down 11% for the week, and the ENA token is down 25% for the week. Okay, next up, I'm going to talk about Hyperliquid. So besides the fact that I mentioned them just in the last point with kind of being caught up in some of the downturn on Friday, they did have some positive news, though, on Sunday. So late Sunday evening, Hyperliquid, which is the largest decentralized futures exchange, announced the launch of its HIP3 features. So HIP3 kind of is cool because it's introducing a new supply sync for the Hype token. What it allows teams to do is that external teams to Hyperliquid can lock up 500,000 Hype tokens, which is worth about $19.5 million. So not a drop in the bucket, to use Hyperliquid's perpetual futures infrastructure. The idea here is that by Hype, they basically are locking up the Hype tokens and gaining access to Hyperliquid's backend infrastructure, and they can launch products that are perpetual future markets, but aren't products that are launched on Hyperliquid's main exchange. So right now on Hyperliquid, you could trade pretty much every crypto asset in their perpetual futures market. But the idea is that there might be some perpetual futures market that you want to create that are either super esoteric or just not supported on Hyperliquid. So one project that launched, for example, with this is called Trade.XYZ, and they're actually supporting stocks, the perpetual futures trading on stocks. So again, something that's not really present on Hyperliquid, but is using Hyperliquid's backend infrastructure, their matching engine, some of their order book features. The cool thing also is that teams can set their own fee share structure between Hyperliquid and themselves, giving them a lot of flexibility. So like I said, only one project is live right now. They're called Trade.XYZ. But there are another 15 projects on testnet, and we should expect them to launch too. So HIP3, though, this is different than Builder Codes, which is another kind of similar product feature. Builder Codes just allows projects to plug in directly to Hyperliquid and say, use their front end, use their branding, but be essentially like like the same thing as Hyperliquid, just, hey, we've got our branding on it. The two projects right now that are really big that use that are Phantom and MetaMask that you may have heard of. You can trade perpetual futures within both of those wallets, but they are basically using Hyperliquid's order book, their flow, everything. Unfortunately, like I mentioned, Hyperliquid was caught up with a lot of the market downturn that happened last week. They were also wrongfully blamed for, liquidating investors last week, and they're down 18% on the week. Okay, last up we have Bittensor. So last week, Yuma, which is the group that was created by DCG to support the Bittensor ecosystem, they announced the formation of Yuma Asset Management. So this is basically a new asset management business, and their plan is to create products that are going to give institutional investors access to Bittensor subnets. Bittensor subnets, if you're not familiar, these are the projects that are built on top of Bittensor's AI network. So to date, the Bittensor subnet tokens have been super liquid and really hard to invest in. And so by giving the new product that Yuma is going to create is going to be great because it'll hopefully be giving access to that set of ecosystem tokens. Bittensor is also slated to go through a halving event in early December, which is also getting people excited about the token again. If you're not familiar, the Tau token follows Bitcoin's supply schedule with a halving event every 4 years, decreasing the number of Tau tokens emitted through the mining process. Tau really rallied a lot on this. It is up 24% on the week. All right, you guys, I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.